From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 15th, 2017. Today we're going to be taking a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. The first thing we want to observe here on the chart, of course, is that this is a downtrend. Not too hard to see that with the green trend line and the direction the chart is moving. So if we're going to trade in the direction of the trend, often we're looking for one of two things to trade in the direction of the trend. First would be a pullback into resistance, and that of course is closer to the yellow shaded area, the green trend line. 2260 to 2320 is that yellow shaded area, or maybe even a little bit further up to the orange zone, but we're looking for a pullback into resistance if we're going to go short within the direction of trend, very much like what happened here in the middle of the trend, where it made the rise into the green trend line and then fell back down in the direction of the trend. That's one reason to look for an opportunity to go short, is the rally to resistance. Second opportunity would be the break of support. Right now, clearly the blue zone right around the 1.2100 level is holding support for the dollar CAD and has been for a few days. Let's go ahead and zoom it in on this area. And as we get down here, we can see 1, 2, 3, 4, 5, 6, 7, 8 days so far holding support right around the blue shaded area, 2100. So what we need to see if this is going to continue that bearish pressure in the direction of the trend is that it breaks down through the 1.2105, 2100, and we look for the continuation of the downtrend. Something else that we have helping us out here, Forex Black Book is red and has been for the past 4 or 5 days. That gives us a little bit of a bearish bias in the direction of the trend, showing that the market momentum has been bearish as well. So one of two reasons to go short: a rally back to resistance, yellow, or possibly even as high as the orange zone. If the US dollar takes a good strong surge positive today, we could see it into one of these resistance levels. If we get a negative run for the dollar or US dollar, or positive for the Canadian dollar, we would look for the breakdown of 1.2100 and the continuation lower. And of course, if it continues lower, our next target down closer to the 1.2000 level. So we have about 100 pips to go. If it breaks 2100, we're back down closer to 2000, the green shaded area just peeking in at the very bottom of the chart. So we need to wait for that breakout. Let's go ahead and take it on down to the 4-hour time frame and zoom it out a little bit here. And there is that same blue shaded area, and we can see the struggle that's been going on around here. A little bit of a rising channel here, if you will, between these two red trend lines. Let's see, let's draw this one out like this, between these two lines. Of course, if it holds support, again, we're back to the yellow zone or the orange zone. The next thing, again, I think we're looking for is the breakdown through this channel, the blue shaded area, 1.2100, and we look for it to go lower. So what does a breakout look like? Often we're looking for an open and close under support, and we can see back in history a period where it did something like that. Right here where this blue shaded area is in the middle of the chart, where it broke under the orange zone, found resistance, and then eventually falling back down. So that's similar to what we're going to look for around the 1.2100 level. We wanted to get underneath it, use the same area that's acting as support as resistance to give us lower risk and higher reward, and then again the opportunity is to take it back down to 1.20 or 1.2000 in the direction of the overall longer term trend. Now we also want to be watchful for changes in the trend, higher highs, higher lows, and we see a little bit of that here, and I don't think this is really a signal of higher highs and higher lows. I think this is just some hesitation, the market lying in wait, consolidating, if you will, before the next run in the direction of the trend. We've seen oil on the rise in the past couple of days, and that's good news for the Canadian dollar. And if we can get some momentum to start to shift in favor of the Canadian dollar, we'll look for this to pressure lower. I think we're fighting against a little bit of a bullish run on the US dollar that we've seen a little bit across the past couple of days. If we can get a sell-off of the US dollar, or positive movement Canadian dollar, breaking 2100 back down to 2000. But keep in mind, watching for rallies to the yellow or the orange zone as other opportunities to go short for the USDCAD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.